Hey everyone, welcome back to Corporate Decoder. Today we're diving into a proxy statement from International Isotopes Inc. And let me tell you, it's not just about board meetings and votes. There's a potential stock split that could make your head spin, or depending on how you look at it, make the stock more attractive. We'll see. Before we jump in, if you're into understanding the hidden stories within corporate documents, subscribe to our channel. Also join our Discord community. The link is in the description below. You will get access to the latest analyses, and it's a good place to discuss trends with other finance heads. Let's begin by understanding what this document is. This is a Schedule 14A, a proxy statement. Companies use this to ask shareholders for their votes on important decisions at the annual meeting. This one is about their upcoming annual meeting in July. So what's on the agenda? Well, it includes electing directors, picking their accounting firm, and an advisory vote on executive pay. Standard stuff. But the big item is a proposed reverse stock split. We will go into this in a little bit. First, they want shareholders to say yes to keeping Hain & Company as their accounting firm. While it is not required, getting shareholders to approve it is something the board wants to do. It's a bit like a popularity contest, but for accountants. What is a reverse stock split? I'm glad you asked. Currently, International Isotope stock trades at a very low price. A reverse stock split is when a company reduces the total number of its shares, which increases the price of each remaining share. Think of it like cutting a pizza into fewer but bigger slices. The pie stays the same, but each piece is larger. They're asking shareholders to approve, giving the board the power to do a reverse stock split at any ratio between 1:450 and 1:275. The board would pick the exact ratio, and they might not even do it at all. Why do a reverse stock split? Management believes it is a most effective means to increase the per share market price of their common stock and is intended to simplify their capital structure. The company thinks a higher stock price could attract more investors, particularly the big institutions that often avoid low price stocks. It could also make the stock more appealing to brokers and analysts who don't focus on lower price companies. It also makes their capital structure more comparable to other publicly traded companies of similar size. It's important to know that this is not a sure thing. The document says there is no assurance that the market price of their common stock will increase following the reverse stock split. It's not magic, and the company admits that other factors like their financial performance and overall market conditions play a big role. The proxy statement also mentions potential tax consequences for shareholders. Generally, if the reverse stock split qualifies as a reorganization under tax law, you shouldn't recognize any gain or loss when you exchange your old shares for new ones. However, there could be complications with fractional shares, so it's always best to talk to a tax advisor. Let's talk accounting fees. In 2024, Hain & Company billed them about $123,000 for audit services. That's up a bit from the previous year when it was around $114,000. No major changes here. Now let's peek at what the top dogs are earning. For 2024, Shosheh Bagadigian, the president and CEO, took home about $430,000 in total compensation, with some salary bonus and stock awards. Matthew Cox, the chief financial officer, made around $109,000. Those numbers include salary, a small bonus, and some life insurance contributions. Looking at the directors, we see that Christopher Grosso earned about $42,000, mostly from stock awards. The other directors receive little to no compensation besides the stock awards. The report also includes pay versus performance information, which means it tries to line up executives' pay with how the company does. This can be kind of subjective, but the goal is to reward executives when the company does well and vice versa. Who owns the most stock? Kenneman Associates is at the top with over 234 million shares. Then you have John McCormack and related parties with close to 110 million shares. A few of the company's own board members are also big shareholders. They've got a couple of interesting notes payable to related parties, meaning to their own executives, a 2018 note at 6% and a 2019 note at 4%, both with extended maturity dates. This means they're paying interest to insiders. Let's zoom out. The company is pushing for a reverse stock split to raise its stock price and attract bigger investors. The goal is clear, a higher valuation and more market visibility, although there is no guarantee it will happen. The board has decided to split the chairman and CEO roles. They think that Christopher Grosso can help with strategy, while CEO Shosheh Bagadigian focuses on running the company day to day. This split leadership indicates checks and balances and ensures the company remains stable. Overall, International Isotopes is at a critical point. The reverse stock split could be a game changer, but it's not without risks. They need to make sure they keep growing the business and hitting their financial targets to make that higher stock price stick. The company is trying to turn itself around to get onto a better exchange and attract a larger investor. If Adobe is trying to turn itself around to get onto a better exchange and attract a larger investor. If that happens, the increased volume will help drive growth. Alright, that's our quick look at International Isotopes proxy statement. What do you think? Is a reverse stock split the right move for this company, or is it just financial shuffling? Let me know what you think in the comments. Also, if you appreciated this decoder and got some value out of it, go ahead and smash that like button and subscribe to the channel. Don't forget to join the Discord community. The link is in the description below. Thanks for watching, and I'll see you in the next one.